I think we're gonna rally pretty strongly in August. So I think we can get back to 65 or get to 65, 6,600 all-time highs in the next couple weeks.
And then 7,000 in the next 12 months, above that?
Yeah, probably well above that.
Well above that.
Yeah.
So I tell you what, there's always Bitcoin available. Just depends on what you're willing to pay for it. And so what I think will happen is this price will continue to discover higher because Bitcoin is the scarcest thing. It's inelastic to the amount of demand that searches for it. So the amount of buying power that we're seeing from the capital markets, from the ETFs, and potentially from nation states like the United States, I think they'll find the supply they're looking for. They're just gonna have to go get it at a higher price.
Tom Lee outlines a uniquely bullish case for risk assets amidst apparent consolidation. Lee interprets the recent market weakness not as a bearish signal, but as a constructive pause, setting the stage for a significant upward move. He posits that softening labor market data provides the Federal Reserve with the necessary justification for a dovish pivot this fall. This policy shift, he argues, is the key catalyst that could reignite the economy, specifically targeting the housing market to build strength into 2026. This macro backdrop is critical, as it informs his highly optimistic forecast for equities and, more pointedly, for the digital asset space. Lee's analysis suggests we are on the cusp of a strong rally, projecting a return to all-time highs within weeks and a push towards new frontiers in the coming year, all underpinned by this calculated view of central bank policy.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Last week was definitely consolidation because we had 5 days where the market opened higher and closed lower.
Really?
And they call that bearish engulfing. It makes sense because we're consolidating that 28% gain from the April lows. And on the job stuff, I think it's just the data's catching up to what we already know. The labor market's been soft, right? So it's, I think, a positive setup because now the Fed has more ammunition to make a dovish pivot in the fall, and it's not too late because we know the thing that they're going to stimulate is the housing market, and you had a couple guests earlier talking about that, and so that is what strengthens the economy in 2026. So I think it's quite a positive setup. We're just consolidating, and then we make a bigger move higher.
Is it fair to say that since it's a dual mandate, that maybe the Fed should have been able to think that there was more risk to a slowdown than to inflation? Do you think they missed that a little bit and they're fighting? I don't know, but Trump said you got to cut, so they couldn't. Maybe they had to err that way just for political reasons.
Yeah, I think the Fed needs to demonstrate independence, but you're right. I think when they look at their dual mandate, they're probably drifting further from the employment metric now because the unemployment rate, if you use the existing participation rate before this report, it's almost 5% now. So the Fed now has to be considering the risk of jobs market actually going into a cycle of weakening.
Right. But you have also been, I guess dovish is the word, on inflation. You have not thought that there is going to be necessarily a big impact from the tariff regime.
That's right. And I think the biggest takeaway is, first of all, if you look at the latest inflation report, the goods component that are tariff-driven, it's been only mild. But also, if you use the same inflation measure Europe uses, which is inflation ex housing, we're actually under 2%. The Fed, if they were the ECB, would be cutting right now.
That's interesting. So by the end of the year, or what target are you using now, and what time frame?
I think we're going to rally pretty strongly in August. So I think we can get back to 65 or get to 65, 6,600 all-time highs in the next couple weeks.
And then 7,000 in the next 12 months, above that?
Yeah, probably well above that.
Well above that.
Yeah.
You know what's fascinating about the asset, and it's not intuitive because it's so rare, is that, to your point, it is definitively scarce. So if everyone in the world wanted an iPhone, Apple could make more. If everyone in the world wanted a McDonald's cheeseburger, McDonald's could make more. The fact that Bitcoin cannot increase its supply means the new supply comes from the market. If you want more Bitcoin, you don't go to the Bitcoin factory to get one. You have to go up in price. Is there enough Bitcoin for me at 120,000? No. Okay, 130, 140, 150. So I tell you what, there's always Bitcoin available. Just just depends on what you're willing to pay for it. And so what I think will happen is this price will continue to discover higher because Bitcoin is the scarcest thing. It's inelastic to the amount of demand that searches for it. So the amount of buying power that we're seeing from the capital markets, from the ETFs, and potentially from nation states like the United States, I think they'll find the supply they're looking for. They're just going to have to go get it at a higher price.
Would you expand to other digital coins, for instance, become a treasury company for Ether or Solana or something else?
Absolutely not. And I'll tell you guys why. I made you laugh there,
Yeah,
didn't
because
I?
you guys are all maxis. Like you talk to somebody who has an Ether treasury company and they'd say the same thing about Bitcoin.
Yeah, so
You can't mix the two ever?
Well, little history lesson. The term maxi was actually invented by Vitalik Buterin. It was a diss. It was slander. You know, I now take it as a compliment. But to be clear, I don't self-prescribe that. Little background on my opinion. Okay, us humans own a little over $900 trillion worth of stuff. Currencies, sovereign debt, real estate, precious metals, fine art, all of the things that we collectively own as a species. About half of that, so call it $400 to $500 trillion worth of it, we're using to save money, right? You own the $10 million art painting not to put on your wall so your toddler can throw spaghetti at it and ruin it. You own it because you want to sell it for $11 million in the future. You own the real estate not to consume it because you're living in it, but because you're trying to save and build a real estate portfolio. So that the amount of wealth humans have created that they want to bring with them tomorrow and save into the future is about $400 to $500 trillion. To me, that's what Bitcoin's going after. It's that pristine store of value. It's that pure money, right? What is Ethereum? What is Dogecoin? What is Solana? To me, I don't know. At best, a technology. Are these things going after Apple, Amazon? If they are, let's go out and give Ethereum credit that I don't think it deserves and say it's going to achieve what Amazon has achieved. Okay, $2 trillion, $3 trillion worth of value to society. Reasonable, nice, a new cool tech stock, and that's if they go on to achieve that. If Bitcoin goes on to achieve a small fraction of the $400 to $500 trillion that humans are looking to bring with them tomorrow, we're talking about tens of trillions of dollars of appreciation. So it's an orders of magnitude larger problem Bitcoin's going after. It's an orders of magnitude sounder bedrock to build a treasury. I do not want to build a treasury on potentially the next Amazon. I want to build a treasury on the new gold, on the new sovereign debt, on the new currency, on the new dollar. So that, for me, our shareholders should know I will never own another asset outside Bitcoin.
The core of Jack Mallers' thesis, however, makes a sharp and decisive distinction between Bitcoin and all other crypto assets, including Ethereum. He frames Bitcoin not as a technology company, but as a direct competitor in the colossal $400 to $500 trillion global market for store of value, a domain currently occupied by assets like gold, sovereign debt, and fine art. This is where he sees an orders of magnitude larger opportunity. In stark contrast, he categorizes assets like Ethereum and Solana as ventures competing to become the next great technology platform, akin to an Amazon or Apple. While he concedes such a platform could be immensely valuable, perhaps reaching a $2 or $3 trillion valuation, it exists in a fundamentally different and smaller arena. For Mallers, a corporate treasury should be built on a foundational monetary good, the new gold, not on what he views as a speculative technology play, regardless of its potential.
We want to do what's best for Bitcoin and our shareholders. We're open to all relationships that help us achieve that. That's our banking partners, that's the exchanges. I mean, for us, it's about being performant in Bitcoin terms and serving the Bitcoin network and growing alongside of it. And yeah, for us being a Bitcoin native business, again, we didn't pivot from an old business model. We aren't a company that needs a new direction. We are Bitcoiners. We've been in this space for over a decade, and so we're native to our metrics, to our core, to our operating business, and that's what we mean. And whatever partners along the way, exchanges, banks that want to support us on our mission, I'm happy to work with them.
Jack, still a lot of skeptics out there who might watch this and say, wait a second, is the point of Bitcoin just for the people who have it now to get wealthier and wealthier? The largest holders of Marathon, of you guys, and of Strategy, convince them that there is a use case beyond just buying and holding, that this is a useful technology?
Well, I think the use case for Bitcoin from the highest level possible is I've created value and I want to keep it. That's it. I got a chuckle out of you. That's true. I got up out of bed. I sacrificed. I worked. I commuted. I did tasks. I created products. I created value for those around me. I want to keep that value.
But even though it's called a cryptocurrency, it's not used widespread as a currency. It's used as something that will accumulate or that people think will accumulate in value.
Yes, I think the definitions of currency and money and how we think of medium of exchange, store of value, I think it gets too complicated. And sometimes Bitcoin is so simple that people don't believe it can be that simple. The reality is money is what you acquire in exchange for your effort, your time, your energy. It's our time and energy in abstracted form. And I exchange my work hours for it so that I can later get the stuff I need in my life. I want to go to Whole Foods and get a steak. I want to go on vacation. I need to pay rent. That's what money's for, is to allow me to create value and take it with me tomorrow. And that's the use case. And today, it's increasingly difficult to achieve that. I can't save it in dollars. We all know that. Okay, you're going to force me to understand Japanese central bank monetary policy? You're going to force me to understand what tech stocks to pick? No, how about something that's definitively scarce, no one can inflate, I can store for free, I can move cheaply, and that I could put it in my brain. And that's the use case, and we all have that use case. Nation state, corporations, families, individuals. Simply put, I think everyone can find value in a technology that is open source and solve that for everybody.
Ultimately, Mallers simplifies Bitcoin's utility to its most profound and universal use case: the preservation of value. In a world where holding fiat currency guarantees a loss of purchasing power, he argues Bitcoin offers the ultimate solution. Its power lies in its definitive mathematical scarcity. Unlike any other good or asset, its supply is inelastic. Surging demand cannot induce more production. Therefore, as new capital from ETFs, institutions, and potentially even nation-states seeks a position, the price must rise to find supply from existing holders. This price discovery mechanism is relentless. Mallers dismisses the complex debates over medium of exchange to focus on this core function. Bitcoin is an open-source, apolitical technology that allows any individual or institution to abstract their time, energy, and labor into a form they can keep, move cheaply, and store for free, perfectly solving the timeless human need to carry value into the future.